Hey, it's Mack with PriceActionTradingSystem.com, and it is Thursday. It's August 6th. This will be our chart lesson for today. And just a reminder that tomorrow's Friday, so no chart lesson tomorrow. Um, but we'll be back again to do it Monday. So during the summers, I've generally taken off on Friday. So if you're wondering why there hadn't been a Friday one lately, that's why. I actually don't want to back out yet. We had a super nice downtrend today, right into the lunch hour, and then we kind of bounced and uh, went into this flatter two-tiered channel here that has a slight upward bias, but really by the time that came about, it's too late in the day, and so not going to talk much about that. But most of the best part of the trading day was all downhill. We had a break right here, um, and then started down again, and the trend line continued to hold. Uh, what you wanted to think about was once that's your first leg down, and so there's your second. So you're looking for a target right down in here somewhere. Um, and but generally, once you get a break of a trend line, you get a couple legs down, and you don't get this bigger move like this. But sometimes when you get a real clear two-tiered, two-legged correction within a trend, you'll get um, another trend that's similar, and this is close enough that where you might see that. So, um, it was a little bit hairy wanting to enter in here, but on a real strong downtrend, anything off the trend line that sets up that's pretty good, especially on a second leg. We got a second entry here. Um, we didn't quite get one here. It's starting to, but you see, every time we're going lower, it's going a good bit lower. It's not those little small moves and then corrections. So it's telling you the trend is still pretty, fairly strong. So you got that going for you. Other than that, it's just saying, hey, the trend is down. I better stay with it. So um, right here, we kind of flattened out a little bit temporarily, and then it just went steep again. Um, but it's clear it was all downhill until about lunchtime, and then we've kind of had a correction since then. Not much of a correction, but a correction. So this was a really good downtrend day, and these are the ones where if you caught just about any of these, you probably had a runner to go with it. So, oops, let me back out, and we'll talk about the trades. I didn't mean to back out quite that far, but maybe it makes it a little easier to see. And I don't have my early trend line on here. This looked more rangy here than anything, but there's two legs up, and then we started down, and there's a trend line right here. Let me get it on here. It comes up here about like, it's probably really even a little steeper right there. That's how you should have had it drawn early. Then you get a break, move to a new high, and then a higher low, or a lower high, I should say, and things sell off. And at this point right here, you really were only looking for probably something similar to a measured move. So it's a big surprise when you get this huge sell off, but it's a nice reward if you use runners. But that, you're looking for prices to come back down here about this far, and that gets you back to the previous little double bottom right here. And so that's how I start off looking for my target. But when this thing kept going, that was a clue that there was something else going on. So, um, and that's why you don't always want to exit on a runner on a target necessarily if there's more room to go. So just keep that in mind. But there's always payoffs and rewards, and the more aggressive you get, the bigger the rewards, but oftentimes the more mistakes you make. So just keep that in mind. So you might have been better off to exit here just shy of the measured move, um, and you would have got another chance to enter in here and make some better trades. So it's a trade-off. So keep that in mind. But anyway, starting out, we were trending up. We got a break, new high. We moved down. We get a bounce, and then we turn down right off the. Well, you wouldn't have had this trend line yet, so I shouldn't say that because um, you definitely wouldn't have had this trend line. There's no way you could get it off the lows yet, so you wouldn't have this trend line until this swing came. But it's a lower high, and you're looking for that next leg down. There's enough room to get out before here. I will say this. This is a terrible signal bar, so you cannot go short below that signal bar on the first entry. But what I would have considered is notice these three bars right here, how they're creating a little trend. So there's a shorter term trend in here that breaks and gets a new low, and then so there's a shorter term trend that starts in here, and I got it really off these first couple of bars here, and but when this bar closed, a break below it would indicate some bearishness that you need before, which you didn't have when the break below it, because this is really your signal bar right here. So the way you'd want to play this is let it break below, put you a limit order back here where your original stop would go, and if you want to be a little more conservative, you might even put it right at the bottom or a tick in it. And you could have gotten filled way all the way up a tick into that bar, and then the bottom falls out. Normally, I would tell you it's too late to enter, but look how bearish that bar is and closes below the EMA. So I'm not against even entering on a stop right there, even though you're late, because here's your signal bar, and you don't always want to do that. But in this case, since it's so bearish looking, and this looks like a range really starting off, and you got all this room down here, I'm okay with giving that a shot, especially with this lower high here. Just be careful and make sure you're reading things properly. So there's really a couple of different ways you could have entered there, but I drew it red because it's even though it could have been, it's borderline being green until this bar right here. So, but this turns out to be a great trade. And then notice this trade right here. You got this high, you move down, you get a first entry long, pull back, and when it broke above that bar, you get a second entry long, and it fails, and you get this little bitty doji. Normally, I wouldn't be that interested in entering here, but with that little bitty doji, it's a very low risk. It's a double top with a lower high than this, and you got just enough room to maybe get out with a scalp before you hit the low. So I kind of like that one, and but only because there's people that are trying to get long and they're probably going to get trapped there, and that does kind of confirm that trend line of those first two swings there. That's the third touch, so there's another reason. And then it pulls back yet again. It doesn't break higher, but it tests this, what I was thinking, hey, maybe another trend line across here a couple of times and then turns down. And so I like going short right there. Even though this is at the low of the day, it is more aggressive, so I circled it in green. But look at that bar, and look at all those tests across that high. You could even draw a flat one across here, really, if you wanted to. And you can see all those matching highs right across there. And so I like that for a short. It is aggressive because you got to go short almost at the low of the day, and that can be risky. But this was a huge move down, so something has changed. Something's going on. The market's pretty bearish right now, and this is also a breakout pullback short because you've got support right across this area here. And you can see how prices tried to come back once, twice, and each time they're making a little bit. They either made a double top or a lower high, and that's a signal that the market's getting weaker each time. And so that's another reason I like that one. But I would have had this trend line drawn across here just in case this is a spike in channel, which is what it kind of looked like, which is really what it is. But for whatever reason, the market was just weak. I haven't looked at the news if something came out or something funny happened, but I'm guessing that something probably did. There's some kind of news that came out or whatever. We don't care what it is. It doesn't even matter. All we know is the market's selling off. So, but also, I would not have liked this short here without finding this trend line. So if you didn't see this trend line, this is a risky short, not being back to that trend line. So keep that in mind. But notice this low, pull back first entry, pull back. This is a second entry short in a downtrend with a bearish type bar. It's not a real big bar either, so it's another low risk. I'm okay just entering that with a stop if you saw this trend line working across here. If you did not, I don't think you want to enter there. And notice that you got a trend line working up, and you got a close outside. Even though it's not a bearish looking bar, it still closes outside, then moves to a new high. That one's a little difficult to see. It's not real clear, but it's there. And this why you want to go short here is not real clear either, but it's there if you saw this other trend line working across here, this spike in possible channel. And where are you looking for it to go? Down to here and probably bounce. It went a little bit further. And generally, when you get an overshoot of a channel, that means you're going to get a break of the trend line. That oftentimes leads to a reversal and a break of a trend line and all that. And that's kind of what it looked like. You still don't want to go long because this has been a fairly strong move down. So you're probably going to get a retest of the lows regardless. And you get another second entry up here. Again, I do not like the signal bar. It's more of a neutral signal bar, but it closes inside that line for the most part. And then you get a bearish bar. And this is almost a perfect repeat pattern of the earlier one. Trying to remember where it was. It's a similar pattern of the other one we saw. Well, similar to that one. Oh, it's this one right here, where you get the bearish bar and then you get another bar beside it. And you see there, it looks very similar, except this bar is not as bullish as this bar was. And so this is more of a neutral bar, even though it's got a little bit of a bullish slant because it closed a couple of ticks off its bottom, but it also closed a couple of ticks off its top. So it's kind of a neutral bar. But I don't think you want to go short below it. But when you see this bar, a break below it, throw your stop limit order where your stop would have been, and it comes back and fills you, and then it takes off. Or once you see this big bearish bar, you know you're probably going to test this low. Look how it shoots through the EMA. Just put your stop right there. So it's it really is almost a perfect repeat pattern. And you've heard me talk about those. If you see the pattern once and it works, it's probably going to do the very same thing the next time. And then this one's working down, and both of these you got runners, and those are big moves. And you know, and then you actually shoot through this trend, pull back, and it's like a little breakout pullback short. We couldn't quite get up here to test this because it hits the original main trend line and gives you a bearish reversal type bar. I thought about this one real closely. There's still probably room to get out here, but it's real close. And we do have a break here in a new low, so you got to be real careful with this one. But the fact that that was so bearish off of that trend line, also a breakout pullback short off of this trend channel line, couldn't even get back to the EMA. The market's still pretty bearish. And at that point, if I entered there, I'm going to look at this measured move right here. And I'm going to look for a target similar to that. And you see we came up maybe a tick short before, and it bounced. So that's a freebie right there, all the way down, knowing that you had something to compare it to and get your measured move right there. Then it bounces. There's a second entry short here. And it's similar to the other one up here, but you don't have another trend line down across there that would prompt you to say, hey, we're probably going to turn down here. And guess what it does? This one would have trapped you, and you probably would have gotten stopped out only to see it go where you think it's going to go. So that's why this one is a little bit different than the other one up here, because there's no trend line, and there's no confirmed trend line. So on this one, you got to wait for it to come back to the trend line, or you got to have a trap or something. And you actually do get a little trap on the break above those matching highs right there. So there's a trap right there. This is also a bearish bar that turns down right off the trend line, right off the EMA. You actually had a break of this shorter term trend line, a close outside, a move to a new high. That's another clue. So you got a lot more reasons you can go short on this one. So even though it's close to being green, I like this for just a straight on short. And again, it's another nice move. And then now you got another one working up. You really don't get a close outside this one, but look what happens here. You test this trend line once, twice, three, and then a fourth time. And even though this bar is more bearish, even though it's got a little green to it, notice how it closed. It doesn't quite close on its low, but it makes a higher low and then breaks lower. So it's very similar to it's a second entry counting from either direction really. And if you went to a smaller chart, you would see the second entry counting from both directions. So, and you might have considered using that limit order the same way where your original stop was. You probably wouldn't have got filled all the way up here where your stop was, but you could have gotten filled um, a tick or so back into this bar, which is really your next bearish bar. Um, so I like that one. Again, the trend is very strong now, so you're just looking for reasons to enter. You can almost enter every pullback. The only reason I even made this one green was because we did have a break in place up here, way back up here. So, but there's another first entry right there. Again, it's somewhat of a doji, but it closes. It could have easily closed on its very low. Um, there's plenty of room to get out before you test that low, and it actually goes even further. So I liked giving it one more shot here. I did make this one green because it's a first entry. We've had a break. We've had several moves down. There's a lot of reasons to be concerned about this trade. Um, so I did mark it green. It's a little bit aggressive. So once you're getting this far into the trend, after a break, it's getting a little iffy. And then notice what happens here. We get another break. There's a second entry short there, but notice how it gets on through the EMA. It gets a little resistance there, but it pushes on through and it pulls back. You don't want to go short below that bar. If you got another similar setup where you had a little trap there, you might consider one more short. But now that we're back above this two-tiered channel, and notice how we've been coming up a little higher above it each time, that's all your clues that, hey, we're starting to lose momentum here. This is a sure thing. If you don't see this, study this pattern, because the first thing I'm thinking when this is going on and we're not getting as much resistance off the EMA is that we're going to get a trap right here, and this is going to be a great long. And sure enough, that's exactly what happens. Notice the new low, pull back first entry, pull back second entry. It traps everybody, and notice how this bar actually confirms the trend line. I like going long right there. It gives you a little pullback, but you don't want to enter there. It's too close to those highs right there. Even though this could be up here, you don't want to risk it. It would have worked, but I think you just want to enter here, and I don't think you want to risk this entry because normally you would expect this trap to take on off pretty quickly. It's like some people were expecting another push up, and the real trap didn't happen here until here, because look how it rocketed up. And then the next one, now people are getting on board and realize, hey, we're going the other way. So you don't want to enter on this high side because we're getting overdone. So I don't see any entries in here. If you look at this one real close, there's a pullback first entry, pullback second entry, but the signal bar is not very good. I don't think, and we've had an overshoot, and I still wasn't sure. It was looking pretty sure that we're not going up here. You got enough evidence now that this is probably right, and so you're getting an overshoot. But you still got to be careful because there might be a midline, and maybe there's another one up here somewhere. But regardless, I didn't see any more entries until right here. This was your first break of this reversal trend line. This is a little scary because it shoots right through that EMA. Then you get a first entry, you pull back, and then you get a second entry here. This one's close to being green because your signal bar is really way down here. Even though your break occurs here, this is what triggers your trade, and your stop really needs to be down here to make this a safe trade. And so this one's borderline green, but notice this little trend working down, the close outside, the move to a new low, and the reversal. And so they probably trapped some shorts right here, and you can see how it shot on up again. And so this is the break of this channel, the move to a new high, and then you start selling off again. And I didn't mark anything after that because I got into the 2 o'clock hour. So when you get a good trend on a day like this, take advantage of it. Just look for good reasons to enter. It's not like slow days or low volatility days or range days. When you see a pullback to a strong resistance and a good setup, you just about have to take them because they're all probably going to be good, and they're all probably going to be good for a good runner and so forth. These are the days, if you're not trading runners, you might consider it, because you get so many of them. Just about every good setup here had a long runner, starting with this first one of the day here. But anyway, that's enough for today. We'll be back again to do it Monday. Remember, no chart lesson tomorrow. Hope everybody's had a good week. I'll see you Monday. But for today, I'm done. This is Mack with PriceActionTradingSystem.com, and I'll see you next time.